This episode of Talk Your Book is proudly brought to you by Spirit Technology Solutions. If you do business, do it with Spirit.
Fundies called me up, told me to take a look, but stay stubborn as bulls and talk their own book. Get the money, get the money, get the money.
Well, Gregg Taylor, thanks very much for making your Talk Your Book debut. Really excited to sit down and have a chat with you. Before we get into your stock pick, I thought it'd be a good chance to just introduce Bombora Group to us and what your guys' philosophy is, because it's a little bit unique compared to some of the other funds that I get to sit down with.
Thanks, Chris, and appreciate the opportunity. A little bit about Bombora. Bombora Investment Management's been around for 8 years now, and we launched the Bombora Special Investments Growth Fund about 3 years ago. It's quite unique in our strategy in that it's a hybrid between a pre-IPO fund and a listed equity fund, and we focus on sort of emerging growth companies, so we call them small cap Aussie equities. But we're quite different in our approach in that, one, we take quite an active role in our investments. So what that means is typically look to be a lead investor, 10 to 20% representation on the register. So it's a high conviction position. But through that, we typically join the board quite often in the chairperson role, and work with the management teams to sort of build out the executive, the C-suite, the board and governance structures, and helping them on their growth journey. So take a very active role in the investments, and that starts typically as a private company, and we help those companies sort of navigate the growth and capital journey to become a listed company. And then another key point of difference is we stay with them as a listed company. So typically look for 1 to 2 years as a private company investment, take them through an ASX listing, and then stay with them for the first 3 years as a listed company to help them sort of get to their growth aspirations.
And do you usually look to exit your positions with a full takeover of that group, or do you sell down on market, or look for a full sale of your stock through not a trailer sale, but an off-market sale to another group? How do those exits generally occur?
Yeah, a little bit of all of the above. So there's a lot of private equity DNA in the Bombora Group. So my background's been in listed equity world for 25 years, but one of the key partners and co-chief investment officer Mike Hill's come from 25-year sort of background in private equity. So we go into every investment with a pretty clear view about what our exit options are. So firstly, we don't view the IPO or the ASX listing as an exit. That's the major round of capital. We get the business ready for institutional money and ready to take on a large amount of capital. So, there's never been an example where we exited an IPO. We add to our position through there. But then we take about a 3-year horizon post-listing as our holding period. And, we're developing all modes of exit strategy. It's firstly just getting to the growth aspirations of the business. And then being a public listed company, we might exit gradually over time after 3 to 5 years. But we're also, again, always exploring, potential trade exits and M&A opportunities for the business to help exit through time. And classic examples, the first business we invested in at Bombora 8 years ago was a business called Ripe. We invested as a private company. It was a $20 million company. Shortly after we listed it, we sat in the executive chairman role for the first 3 years. That's grown to a $400 to $500 million company that's held by most of the institutional small cap managers in the country. Highly profitable, dividend paying. When we just gradually exited that position, over that 3 to 5 year period, and people didn't really see us go, and that business continues to go from strength to strength.
Beauty. And what stock did you want to talk us through today?
Yeah, today, really keen to talk about Bike Exchange. It's a company we've recently taken through that ASX listing journey, and got some genuine conviction around the growth opportunity ahead over, again, that next 3 to 5 years for the business. And it's still relatively new to the market, only listed on the ASX in February, and our sense is that probably the market doesn't truly appreciate the opportunities. I thought this would be a great forum to talk through our views.
And so talk to the viewers that haven't heard of Bike Exchange before. What do they do, and what does their business model look like?
Yeah. So Bike Exchange is quite simply, it's a global online marketplace for all things cycling. So, so from road bikes to mountain bikes to kids bikes, it's the e-commerce platform that sells all things bike to the broader market. And so it's founded in Australia and has a very dominant position in Australia, but also operates in 8 countries globally. So operates a hub and spoke model, but has a very strong presence in the European market, based in Germany, also in the US market, and also in Latin America, based in Colombia there. So it's very much a global business, and it's a key point of difference is that it's a marketplace business model, which means it facilitates e-commerce transactions for all things cycling, though it doesn't hold inventory in doing that. It connects the consumers to the retailers in those global markets, and tries to facilitate the transaction, and ultimately with the aim to be the destination for all things cycling.
And they've got different revenue streams. Maybe talk us through what the difference is between their e-commerce commission, their subscription revenue, and then the media revenue they derive as well.
Yeah, good question. So firstly, the core of the business was found as a classifieds business, not too indifferent to, if you think of the real estate.coms of the world and the car sales. So what you have is the cycling retailers around the key markets. So in Australia, 70% of the bicycle retailers pay a subscription to Bike Exchange to offer their range of products online on the Bike Exchange marketplace. So what that means is, the local bike store there'd be a direct link into their inventory system. You can see all the things they have for sale. Then you can have the option to either transact for that product online via an e-commerce transaction, or you can actually get referred to go into the store and see the bike or accessories you're looking to do. So that's roughly around 50% of revenues is what we call retailer subscription revenues. And that's, very sticky, recurring revenue stream that scales very, very nicely. And again, if you look at a marketplace business model, and again, you contrast it to your car sales, your real estate.coms of the world, there's a real benefit in being the first mover advantage. That's getting the number one market position, such as Australia, where you've got 70% of the retail stores have their range on Bike Exchange. And so that was the core of the business. So that's important and ongoing revenue stream. And then if we look at the equally important revenue streams, what we call the e-commerce revenues. So again, once you're online and you're looking for, say, men's mountain bike in a single suspension Trek, size medium, you can hop online, work out where it's available, do a bit of price discovery, but you can actually transact online for that purchase. And so Bike Exchange generates a commission on that e-commerce sale for anything that's transacted online. So that's the bulk of the revenues. To your point, there is a third revenue stream, which is called media. And to be quite transparent, that's a sort of decreasingly relevant revenue stream for the business. And what that does is it allows people to advertise, because we get a lot of traffic. So look back the calendar year 2020, we had over 40 million unique consumers come onto Bike Exchange to look now for cycling product. So that's a big audience. And so the ability for brands and other companies to advertise on that platform via a banner ad or wherever it may be is what generates the media revenues. But again, the business is really focused on growing that e-commerce and retailer subscription side of the business and bundling those media opportunities into those users.
And so there's been some tech platform businesses, which you mentioned, REA, car sales, where they've just enjoyed such incredible margins and really high return on equity and just been incredible businesses. And then there've been other businesses, businesses like iSelect, which we had on recently, which started out earning really nice margins, but have since become commoditized. Is it the relationship with the retailer and that subscription model? Is that the IP that Bike Exchange have, which you think is going to leave them in that category of margin protection and having an economic moat versus some of those other platform businesses which haven't enjoyed such margin security?
Yeah, again, great question. Marketplace business models are still relatively new to the Australian market and aren't well understood by the investor community, but it's a lot of IP in building a leading marketplace position. And so there's three elements to building that leading market position, which generates a genuine moat. So firstly is the technology platform. So it's actually a very sophisticated technology platform that enables, in Bike Exchange's example, you've got thousands of retailers selling, thousands of brands but millions of SKUs real time. So the ability to be able to look into the inventory systems and know what bikes or accessories are available real time. And then not only that, once you can see what's available, the ability to transact and facilitate that transaction in one click of a button is very sophisticated technology as well. So that organises the payment as well as the freight and logistics component of it. So that technology platform takes, it's tens of millions of dollars to build if you're to do it yourself. And so that's the first part. But then the other two important parts, and it's really difficult to build a marketplace business model because it's a bit of a chicken and the egg. You've got, again, using Bike Exchange as the example, to sign up all the retailers, you need to have the consumers on the other side wanting to buy the product, and vice versa. The consumers aren't going to be there until you've signed up the product. And so it typically takes 3 to 5 years to build that market position. As I said, to get using Australia as an example, 70% of the retailers using Bike Exchange. There's no one else close to 10%. So we've got that clear advantage that's hard to replicate, and it's a genuine, you've got to prove out that you've got the eyeballs and the consumers, and you've got to prove out the thing. And that's the moat that's why if you look globally, again, look to the US market, these marketplace business models globally, trade at very high premiums and motivate valuations off the back of that. So that's the moat. And you speak to anyone in the industry, there's typically a 3 to 5 year time horizon for someone to launch a marketplace to get to a level of relative maturity. And so we've got a nice head start on anyone else.
And the customers, has it been going long enough to see how regularly customers make a purchase on there? Is it a significant lifetime value, or is it a case where customers come and they buy a bike and they're not seen again?
Yeah, no, absolutely. There's great advocacy from the customers. And if you think about the journey, if you start with, you buy your first kid's bike, it depends, start at the real base end and you're looking for a bike. And especially in the current environment, a marketplace such as Bike Exchange has great utility because it's actually hard to buy a bike at the moment because there's not a lot of inventory around, same as what you'll be hearing with cars and boats and everything else in this COVID world. So firstly, you want to buy a bike, and so this is a great tool to work out what's available and get to the bottom instead of driving around to 6 bike stores in your local area and finding they've got no stock. So once they start that journey, that they buy the first bike, then typically you need a helmet, and then a kid will go through 2 or 3 bikes over time. And what we've found is that repeat use, once they've had that positive experience online with Bike Exchange, there's a real journey. If you spread that out over the family, you might have 2 kids, and then the kids get a bit older, then the mum and dad get themselves a bike and want to ride with the kids. So there's a real customer journey to be had. Flip it on the other side, the passionate cyclists, whether they're the guys on Lycra or guys and girls on Lycra or the mountain bikers, these guys are renewing their bikes almost annually and spending north of $10,000 plus on their bikes and their accessories.
And then selling them secondhand on Bike Exchange as well, quite a bit.
Yeah, so at the moment, it was secondhand sales has only been a relatively small portion of our business, but it's actually an initiative where we're re-engaging with and really lighting up again. And we talk about sort of M&A opportunities for the business. That's one area where we're looking to scale that side of the business up. So yes, there is the legacy of the Bike Exchange business is you can buy and sell used bikes, but north of 90% of our transactions are for new product. But we see a real opportunity to grow that used part of the platform. And
talk me through the numbers. What's the current market cap and what's the top line growth look like?
Yeah. It's at the moment the market cap, it's bouncing around. It's around $70 million market cap. There's good liquidity in the stock, and I'm really pleased with the register that was built when this company listed. Got some great, well-known institutions on the register, and they've been very supportive since listing. We've also got a couple of the earlier investors. So firstly, the founders of this business, Jason Wyatt and Sam Salter, that they're still meaningful shareholders. There was no sell down at all by any of those investors through the IPO process, and they're escrowed for a 2-year period. So they're very much on the journey. And then there's people like Jerry Ryan, who again was a big supporter of the bike exchange business as a private business. And again, he's ongoing shareholder with sort of north of 20% of the register. So that's there. If you look at the revenues of the business, this year, and there's some broker reports out and everything, that we'll do sort of north of $5 million of revenue. Though the opportunity here, and it's a genuine opportunity that they're working on, is how to turn that to $50 million of revenue over the next 3 years. And there's genuine belief at the board and executive team for the business to achieve that goal. And that's through organic opportunities as well as some M&A. But now we took $20 million of growth capital at the listing, and that's still largely intact. So we've got growth capital to execute on that aspiration. But to your point or question around the profitability, as we're growing into new markets, and I'll talk about some of the growth opportunities in the new markets such as the US and Europe, but the business operates at a sort of $2 to $3 million loss per annum. We're profitable in Australia in the more mature markets, in the newer markets. So the aspiration really is to turn this into a $50 million plus revenue business over the medium term. And to do that, there's probably another 12 to 24 months of loss making around those rates. Look, we could turn it to profitability tomorrow and grow at 50% per annum. And that's the current run rate, the historic run rate. And we're on track to do that this year, even cycling, pardon the pun, but cycling the big COVID numbers from last year. We're still growing at 50%, which is, a great organic growth rate for the business. But to get to that, 100, 200, 300% growth rates per annum, where we're investing in the business. So I would suggest FY23 is more likely to be a period where the business can reach profitability.
When you mentioned some of those overseas markets in the US, Europe, and they've got a joint venture with Orteco in Latin America, maybe talk us through which of those feel like they're most important for the business going forward, and maybe which ones you're most excited about.
So definitely the US and European markets are massive opportunities. So they're markets that we've been in for 5 years, and so the Bike Exchange has done that hard work. I talked about the grind of getting the critical mass of retailers and consumers and getting the tech platform integrated into all the payment systems and dealing with currency and local tax issues. All those problems are solved. And we've only got about 10% market share of the retailers in both Europe and the US. Whereas again, remember in Australia, we've got to 70%. And there's a genuine opportunity for Bike Exchange to get to that dominant market position in the US and Europe. And so that means like 50% market share of the retailers. And we've got a very clear strategy and we've built out a really strong team to go after that opportunity. So the big opportunities in the European and US markets. In the US, we signed a great partnership with Trek, which is the largest cycling brand in the world. And very, very large in the US, and we're their chosen partner for e-commerce in the North American market. So it's a great opportunity to springboard and accelerate that growth rate in US. And then in Europe, there's a similar opportunity with a point of sale software system, either payments and inventory system that several thousand of the retailers use in Europe. And that partnership's working extraordinarily well. And it was already in Europe, off not modest numbers, we're growing at 400-500% per annum off the back of those partnerships, and it's dialing those two up, which, to be fair, if we look forward, at the moment, Australia's the dominant market, but without question, in the next 2 to 3 years, that'll be quickly overtaken by the US and Europe. And just finally on that Latin America, cycling's booming in Latin America at the moment for all the reasons that it is around the world. But they won last year's Tour de France, and it's a real, literally the market itself's growing multiple fold. And so we've got a great partnership with a local group there. We're currently in the Colombian market, which is very strong cycling market, and progressing plans moving into Mexico and Chile, and expanding there. But they're probably 2 or 3 years behind the evolution of where US and Europe are.
Right. Well, it sounds like there's plenty of good news stories come over the next 12 to 24 months. So one I'll be watching very closely, and like I said before, really appreciate you coming on and giving us some of your time.
Yeah, I appreciate the opportunity. Thank you again.
This episode of Talk Your Book is proudly brought to you by Spirit Technology Solutions. If you do business, do it with Spirit. If you're enjoying Talk Your Book, make sure you subscribe to Chris Judd Invest.